Financial terms. Everybody hears about financial terms, but if you're new or just getting your feet wet, I should say, into the world of personal finance and the stock market and what's going on and why prices go up and go down, there's a lot of these terms you may have heard of, especially these acronyms that people throw around and you're trying to learn, but you're like, wait, I don't know what that means. So we're going to do a couple of videos on the channel to kind of explain some of the acronyms and terms that you may hear as somebody who might be getting into personal finance and economics and might not really understand what they are. So the next time you hear somebody say them, you'll know what they are. First one we're going to talk about is the CPI, which stands for Consumer Price Index. It is the measure that examines the weighted average of prices of a basket of consumer goods and services. So like there's food, there's transportation, there's Medicare. It's all put together and calculated by taking the price changes of each item and then averaging them out. So the prices are collected periodically, weekly, monthly, etc. And then they use that index and the number that they come out with that to assess price changes and as it relates to our cost of living. So if food's going up a lot, they're going to track that. If transportation's going up a lot, if gas is going up a lot, et cetera, they track that. Here are the key points about CPI. The reason that they calculate it is to measure inflation and conversely deflation. But right now, for us, it's definitely to measure inflation. Measuring the changes in the cost of a basket of goods, it reflects the purchasing power of, in our case, in the United States, the dollar. If you're somewhere else, maybe the pound or the yen. There are different types of CPI, though, so this is where it does get confusing because you'll hear somebody talk about, well, CPI-U and CPI this and CPI that. So CPI-U is the Consumer Price Index for all urban consumers. So that's about 93% of the total population. When they say urban, they don't just mean the cities. The CPI-W is the Consumer Price Index for urban wage earners and clerical workers. This is all coming from the Bureau of Labor and Statistics, the BLS. They define what that basket of goods is. So once they determine that basket of goods, they're going to get the prices collected from all retail and service outlets. So they'll go to Walmart and Target and a bunch of other places, and they'll take all that information together and they'll add it to something else called the index formula. Now, the Bureau of Labor and Statistics uses a specific formula to calculate this. So they compare the current prices that are in the basket to the prices in a base year. So they're going to take all of the prices that they're getting from all of these retailers and service providers, and they're going to compare it year over year, month after month. There are adjustments that can be made. In fact, you should be quite accustomed to the CPI changing quite often. So CPI will be adjusted for seasonal reasons. There's core CPI that can exclude volatile things like food and energy prices, so you can get a better understanding. Because if like something happens and food goes up an exorbitant amount, they're going to adjust for that because it's an anomaly and not something indicative of the way things are normally going. There are a couple of uses for the CPI. A lot of it you'll see, especially with all the speeches that the Fed chief, Jerome Powell, makes and other people in the Federal Reserve. A lot of that is them making economic policy. Now, the CPI helps them make decisions on interest rates and economic policies, but it's not the only thing, but it is a strong indicator and one that you'll hear a lot. Cost of living adjustments, Social Security benefits, and other government programs, they take into CPI as far as them adjusting the cost of living and how much they're going to pay out. Wage negotiations are used by labor unions and employees to negotiate wages for corporations. So they can say, look, the CPI is this. We think we should be getting paid more because obviously, well, it doesn't work all that often, unfortunately, but you can tell by using the CPI data that, hey, you probably need to pay more in wages to your employees. Overall, it's a crucial economic indicator, and really CPI is used to see how healthy or unhealthy the economy of a particular country is. Now, there are some problems with the CPI, substitution bias and quality new goods bias. So when the price of the goods rise, consumers tend to purchase less of it and they seek out substitutes instead. So sometimes it's not going to be accurate if you're just going by the CPI, because people will, if maybe you don't like sugar, so you'll get something else, or maybe whole milk is too expensive, so you'll get a substitute for it or something like that. Conversely, as the price of goods fall, people will tend to purchase more of it. So there are some issues with using CPI, which is why it's not solely used to measure the cost of living, to measure the health of the economy. But again, it's a good indicator. But you're probably listening to this, I know some of you are, and trying to figure out, as an investor, how can you use CPI data? Well, there's several ways to do this. It's good for inflation tracking. So and this is what a lot of people are doing right now. They're waiting to see when we're going to get rate cuts. Many people are projecting right now that we're going to get a rate cut, at least one this year. They were hoping for two, but at least one in September. And CPI is a strong indicator of whether or not Jerome Powell and the Federal Reserve are actually going to cut interest rates. It is the primary tool, I should say, to use for measuring inflation. So while a stable or falling CPI suggests low or decreasing inflation, rising CPI that signifies that it's going up, and we don't want to see that anymore right now. Investment decisions can also be made. You can use, if you understand the trends that CPI changes cause, that can affect the purchasing power of money and influence market conditions. So if you see that people are doing a lot more in tech, tech's been very good the past couple of weeks as time of this recording. If you look at NVIDIA, it's one of the few stocks that are holding up the entire market. You might want to throw a little bit of money over into NVIDIA before it all dries up. Interest rate predictions, like I said before, the central bank's policy comes a lot from the CPI data. The bond market is also affected by CPI data. Interest rate changes directly impact bond prices and yields. Investors adjust their bond portfolios based on the anticipated interest rate movements driven by the CPI data. So sometimes bonds and the stock market go opposite of each other, but the bonds tend to kind of do their own thing. And if you're into bond investing, that's a whole separate topic in itself. But much like stock investors, the bond market does rely somewhat on CPI data if you are doing a lot of trading or you're looking for bonds to invest in. Real estate investments are also heavily affected by CPI. So we mentioned core CPI. That is really related to how much we're going to pay as far as points on any kind of loan you're taking out, and that's commercial or real estate, and any kind of real estate investment. Inflation can lead to higher property values and rental incomes, as the investors in real estate, or especially if you got REITs, which is the Real Estate Investment Trust, which we've covered on this channel before. Check out that video on the channel if you haven't seen it before. Those are good properties and good tools and vehicles that you might want to look into investing into, since they got to give up the majority of the money over to the stockholders in the form of dividends. But real estate people monitor the CPI to gauge the potential return on getting a retail property or a commercial property. So if you want to get a commercial property, like you want to open up a strip mall and dip your toe into doing that, which could be a lucrative business, it could cost you a lot of money. As a note on that, I've heard from a lot of people who are into real estate, especially commercial real estate, that, and it's an old saying, that fortunes are made in recessions. So if inflation is kind of high and we're in a recession, there's going to be a lot of real estate people who are going to, especially commercial real estate, that are going to be looking to buy pretty soon, and they're going to be monitoring CPI as well. Commodities investments are also affected by this. The foreign exchange, the Forex. You hear a lot about Forex these days. They also watch the CPI. Inflation protected securities are watching CPI. And you can also use it for portfolio diversification if you are an investor. So this comes down to risk management. Investors use CPI data to manage inflation risk in their portfolios. So they might diversify into various different assets. Some of them may perform well over time, so they already know that they're going to outlast the inflationary period. But these commodities are like I said before, real estate and inflation-linked bonds. Other investment products that are a little bit risky, depending on what the CPI is, you might be less likely to go in on a new startup or a new IP that drops. You might not want to take that risk if the CPI trends are not in that favor. Allocation shifts also are affected by CPI trends. Investors might shift their assets from one sector to another one. So if you're losing a lot of money on, like, if you're doing utilities, and because the cost of living is going so high or whatever it is, you might not want to put more in this utilities. You might want to put more in tech. Or if consumer staples are not doing well, you might want to move or spread that out somewhere else and then come back into consumer staples later on. So there's a lot you're going to get from studying the CPI, or at least knowing what the CPI data is showing. There's plenty of websites online, and you can do your own research. I got some links down in the description box below. Some good places to look at economic data and look at the CPI numbers, look at what the Federal Reserve is doing and what the central banks are doing in relation to current trends in CPI. So that can help you make smarter investment decisions as you continue to learn how the stock market works, how economics work, and how the financial systems works, so you can make some money and develop good, sound strategies instead of just throwing things at a dartboard. But that is all we got time for today in this quick video explaining some of these terms in the personal finance and economic world that you probably have heard, but you don't really know about. If you have any questions, please, of course, leave them in the comment box below. Also, check out the description box below. There's plenty of goodies down there. Crypto's doing its thing. Robinhood's still viable. Webull is pretty good. And they're all having discounts and giveaways. So as you always know, Robinhood gives away a lot of stocks for signing up. Webull gives away a lot of stocks for signing up. Coinbase is giving a lot of free crypto for signing up. And if you want to take advantage of those, check out the links down in the description box below. Until next time, I will be back with more news, with more coverage, and more explanations of certain things in the personal finance world here on Wrestling with Finance, the YouTube channel for people who've struggled with finance in the past and look to do better with it in the future. Be safe out there.